What up and welcome to the coffee shop, everybody. This is your host and barista, and I gotta say that I have now tried to record this thing 6 times. I'm just constantly getting interrupted. There's so much going on. It's unbelievable. I've got a bunch of companies that want to sponsor the channel, which is really cool. There are a bunch of other exchanges, and I'm looking to the emails of those. They really enjoy the content, which means you guys are enjoying the content, and it is getting a lot of traction. It's getting a lot of notice. So thank you to everybody for liking this video. Thanks for liking the video. And thanks for subscribing to the channel. Subscribe. And thanks for watching this video all the way through. So let me warn you from the beginning, this video is going to be a little bit longer than I can't shorten this video. I just can't do it. Okay. This is not going to be a short video. Prepare yourself, sit down, watch this over breakfast, and make sure the house is quiet. Put the headphones on and you're good to go. This is going to be a video that I will probably do once. And this is for you technical traders, people doing chart analysis. This is really geared for you guys, okay? And this is going to be a price prediction video. See what it says right here? It's going to be a price prediction video for ETH perp. Now, if you just want to jump to the end of the video, you don't need to. Instead, what you could do is you could just look at my chart and you could see that on it, where did they move the arrow to? Gee, why did they do that? So you could just see that my current prediction for price is right there, right? That's boom right there for ETH perpetual. That's where you should be getting out of your trade if you want to do that. All right, now for everybody who just simply wants to take that, run with it, go ahead. The video's done for you guys. Just enter your trade right now and make that your target if you like to. Again, this is not financial advice. This is an analysis of price and price action for the movement forward on ETH perpetual per my analysis, per what I perceive the market to do, okay? And this is based off of how I understand imbalances get recovered in the market. So let's just talk real quick about that. I want to show you real quick what imbalances do. Also, this was the big dump that happened on August 17th, started on the 15th, right? This, I can tell you right now, this was not because of any company selling its shares or selling its stocks or whatever. This activity was already predetermined, including the bottom of this move. And if you had the indicators that I create, you would have been able to target the entry and target the exit. And I want to show you how. Okay, so first let's cover how imbalances get mitigated, I should say, or how they get recovered in the market, right? So if you have an imbalance, let's do this. Here you have an imbalance in the market. Market moves down, creates its imbalance, and it continues moving. There's a bunch of other imbalances that take place in the market. An imbalance is basically viewed as when you have a high that does not sweep, okay, the full face of a candle, okay? And it doesn't have to be the next candle that does that. It could be a bunch of candles later on, like this high sweeps out all of these moves down because price likes to move nice and evenly sideways. That's what price loves to do. Just move slightly up, slightly down, slightly up, slightly down, right? That's what it likes to do. But because we mess with the price and we get in and out of trades, we really ruin the market. So it's us that are really messing it up. So when price goes into a ranging market, what it does is when it breaks out of the range, it is looking for the most recent imbalance of the market, right? So that means here, price was ranging, okay? We'll take that off. Price was ranging. It finally breaks out of the range at this point, and what is it doing? It's looking for, here's the close, here's the highest close right there, okay? It's looking to mitigate this imbalance right here, this, okay? I'm just putting the side of the box right there. Price needs to recover that, and it does. Does a really good job. Even creates a little bit extra, so there's extra liquidity left in the market. That's how I determine liquidity, just so you guys know. There's extra liquidity left in the market here. So there's going to be another little push down to recover what's left here, right? So market comes down, mitigates this. It's always looking backwards. I don't know which way the camera is facing for you guys, but either way, backwards. It's looking backwards to the left of your chart, to the left, okay? So that being said, let's get rid of these. I don't need this now. So to actually recover that part of the market, okay, to recover this, okay, the market created another imbalance right here. So once it reached the low, it needs to recover this. And it does that by coming up, ranging, right? It moves to the bottom of the range and it goes up. This move up recovers all the imbalances left behind. So now there's nothing left. So what do you have? You have a ranging market. And then it has to break out of a range again, and it looks for the most recent imbalance right here. You missed it, didn't you? That means the price needs to break down below it and recover all of this, and then enter another range. So that's how, okay, imbalances are recovered. That's how you attack fair value gaps. That's what you're doing. Fair value gaps are targeted based on the most recent imbalance left in the market. Okay, so we're a few minutes in. Now you understand, I hope, how imbalances are targeted in the market, okay, because they contain the liquidity left behind. Like I said, this is a strong move down. Let's do this. This is a strong move down. Price did not need to come down this low, but it only had to come down this low, which means this is liquidity left in the market. So the price has to come down to this area and mitigate this. It has to do it. Okay, there's liquidity left down here, actually right there. Okay, so that being said, I perceive that price, okay, there were imbalances here, there were imbalances here that didn't get mitigated, and then price came way up and covered all of these imbalances, right? Why did it move beyond that height? Why did it do that? Well, actually, there's the wick. Here's the bottom right there. Why did it move beyond this height? Well, simple. There were still imbalances left here, right on these candles. See? All of this is imbalance still left in the market. So price came up and it started to recover most of it. It didn't finish. It didn't finish because to do it, it created another imbalance. The candle itself has an imbalance there. So it needs to come down and recover that as well after ranging. Now, you understand what I'm saying. Always look to the left to find out the imbalance that needs to be recovered. So here's my prediction. Price is going to come down here to this consolidation area, take care of the imbalance, sweep that, right? And it's going to enter a consolidation area. Then it'll move up, hit this consolidation area that exists multiple times, right? Look, I'm saying that this is a consolidation area, right? Previous consolidation right there. If I drag this backwards, there it is. If I drag this backwards even further, there it is. What if I drag it back even further? There it is. Can I go back further? I probably can. See? Strong areas of rejections, right? Imbalances being recovered, consolidation areas, all of that, okay? So let's go back. So this is a strong key level right here that it needs to break through. If it breaks through and does not leave any imbalances down here, it will break through to the long side and hit this little sweep that it needs to make, right? For that, it'll hit that, bounce, and it still needs to recover all of these imbalances. If it left no imbalances here, it will continue to rise, hit a consolidation area, right? There's another one here. I can draw it out for you. There. Look to the left. Sorry, left. Okay. See, price came down, strong rejection, bounced up, came through it. Tapped it, right? Tried to tap. I have it off a little bit. My area is not perfect, but of course, broke above, retested, right? Okay, you see what I'm saying? All of that. And this is simply by looking at previous action in the market. And what also tells me this? Okay, why do I say that at certain points it's going to be stuck at certain levels? Well, there are key levels in the market, okay? There's key levels. Price needs to attack these key levels. There's one here, right? And that just happens to be at a consolidation area. This one, okay? So I'll take this out. There's another key level up at this point. I'll go into the middle, or I'll go to the top of it, which is right here. There, key level, right there, which is the same place that price came down, tapped it, and took a big candle to break through. An imbalancing candle had to break through this area. So if I go to the bottom of this area, what do I get? Let me see here. and I get the bottom of this, roughly the bottom of this key level right there. It's not exact, but it's pretty close. Look, gives you a nice consolidation zone. Pretty cool. So get rid of this. I don't need this anymore. How do you get rid of this? 1, 2. So, and that is how I'm predicting where price is going to move to for Ethereum perp, right? So what am I doing? I am waiting currently with an alert for price to get all the way down here. I'm going to enter a short position when it gets down here, right? Target 1 is the entry. Swing low is going to be down here below this key level, right? I'm going to find an ATR value of good volume in this area, and I'm going to set my swing low way down here after price starts moving away from this area. In fact, what I'm going to do is when price gets here, I'm going to enter my long position. When it crosses this level to the upside, then I'll know where my swing low can be, because I guarantee that when price crosses here, it's going to create a long wick that I can use as a stop loss, right? And then I'm simply going to target 2, 3, and 4, right? That's going to be how I'm going to play that out. Now, you see all that? Play it back in the video. I'm going to show you now how this big move down on August 15th, how all of this collapse had nothing to do with crypto being sold, Japan selling anything off, political news, whatever. All of this was predetermined. It's simply the area where support and resistance was broken through, a key level was broken through, and the next level was the bottom of a key level. It simply collapsed. Volume collapsed. That's all. That's all it was. Now, if I can prove that this was predetermined a month prior, then you have to agree the events that took place on August 15th have nothing to do with this drop. Again, if I can prove that these areas, that this area was already existing over a month prior, okay, then you have to believe that this didn't happen because of something that happened on this day. So the Mass Effects liquidity, okay, the Mass Effects smart money concepts, you have to pay attention to that name, smart money concepts. It is truly drawing out for you what the market is doing in real time, okay, in real time. These support and resistance areas draw out instantly as soon as they're created. And they continue drawing out for as long as you like them to be. And new ones draw out when new ones are formed. So there is an area where a previous support zone was introduced by another support zone. They run back to back, okay? And just below them is a resistance, exactly right there. So I want you to see this, all right? And I marked it out right here. I want to show you this, right? Let's hit the replay. Okay, right here. Now, what I'm talking about is these, oh, it's still plotting out. Okay, so see, red zone, green zone. This is support, this is resistance, right? Now, the way this works is this is the strongest area of the resistance. This is the strongest area of support. So let's just say I draw a line here. Let's just put a line there. And I'll color it red because you guys are visual, okay? I'll make it red. And this is the strongest area of resistance right here, okay? If price can get through this zone and break this, you have a big move to the upside. If price can get through this zone, right, and break this level, you have a strong move to the downside, okay? That's how that works. Now, let's play this out. I want you to see something. It's drawing out just ahead of price, but you're going to see that a new area forms right where an old one exits, right? See, here's a new one forming with the same height, right? The top of this zone is the same as the top of this zone. I'm looking for another support area to form as well. There it is. It just formed, right? And it forms right there. So they are laying right on top of each other, exactly on top of each other. So I simply need to break what? I need to break that level. And if you look very closely, look, very small movement apart from each other. They are basically on top of each other. So I'm going to look for a previous area. Like I said, keep looking to the left, right? Here's a previous, like I said, the bottom of the red area is the strongest area of support, right? Okay. Bottom area is the strongest area. So if you break that, then you have a very strong move to the downside. There we go. Let's let this play out. I'm just going to let it play. Now, this area was drawn out when? This area drew out June 29th. Okay, this area drew out on June 29th. So tell me, what does June 29th have to do with August 15th? Anything? Nothing. There's nothing that happened on June 29th. So 15 days ago, or 15 days prior, right? Something like that, 15, 20 days prior, is when this area was created as a support area. All we needed to do was wait for support and resistance to reverse each other, right? And for you to break a key level. You just had to break a key level. That's all. Once you break below that, you have a strong move to the downside. Now, when you break a key level, you have to break it with overpowered candles and overpowered volume, which means they have to be giant candles, right? And lots of volume. On my indicator, you'll notice that there are no red candles. There's none here, okay? Here is green. Oh, here's a red one, okay? Through a structure, which means you will get to the next level. And sure enough, price goes up, comes down to the next level, and it stops, right? Here, this red candle forms, but it does not break the structure, okay? It also doesn't break the structure of this zone. This one does. This is a candle, breaks the structure of the zone, and it breaks the key level that is inside of it, okay? So red candles are massively powered candles. Green candles are massively powered long candles, right? This one starts in here, and it just continues to break everything. So coming out through here, no red candles are forming, right? Okay, no problem. Let it play. Red candle forms outside of support and resistance, while support and resistance are laying on top of each other, and the candle does what? It breaks below a key level, creating a break of structure, right? Now you can get a break of structure without a red candle, but if you get one with a red candle, you have all the volume you need to simply go, okay, I'm done waiting. I'm going to do this, go to my support and resistance or my key level. I'm going to set this over here. There's my bottom from a previous activity, and that's it. So you could have entered that trade for a short on August 16th, right? Let it play out. There you go. All the way down there. But that move was created by activity way back here. That's what I'm saying. How is it that this level was created and people are saying this is the bottom? That's not true. Not true. All right, peeps. So that's me and my price analysis and my voodoo magic and my alien barista stuff that I do on a regular basis. Let's see. So we are 18 minutes in, right? Okay. Sorry it was taking so long. No big deal. Hope this was beneficial for you guys. I hope that this price analysis that is on ETH perp, I hope this plays out for me. Screenshot this if you want to. I know I'm going to. I already have. I have it in my WhatsApp as, you know, evidence. And we're going to see if this plays out. I like how this works. We're going to see if this actually plays out the way I need it to do. And this would be a very long trade, another super long trade that I'm in. How long is this going to take? I couldn't tell you. But the drawing for this, oh my God, the drawing for this is 9 days. Yeah, we'll see if that works. All right, peeps. Thanks for coming through to the coffee shop. I said this is going to be a long one. I'm sorry that it is, but yeah. You know, I'm only going to give you some good quality content. Hope you enjoyed it. Peace out and watch out for the podcast coming up next. Later.